Hello, my name is Douglas Arner, and this is Looking Back, Looking Forward. This time around, I want to talk about one of the biggest trends that is generating probably some of the most discussion we've seen in tech and society for a long time, and that is ChatGPT and generative AI and its implications for the financial sector. And if we think about finance, something that we've talked about many times, finance has had many decades now of electrification, of digitization, and of datafication. And as part of this, finance is not only one of the largest spenders on technology, but it's one of the largest spending sectors on analytics in particular, and various forms of artificial intelligence, including machine learning, neural networks, and a range of other related technologies over an extended period. And when we think about artificial intelligence, not only has finance been one of the leading spenders, but it has also been one of the early developers, one of the early adopters. And if we think about financial services, we can look at a number of different areas where finance has been particularly at the forefront in the context of use of AI. And probably the single most significant of these has been in the context of securities trading. And particularly if we think about the evolution really since the early 1980s of digitized trading of securities, of automation in the context of securities markets, program trading in the context of the 1987 crash, or the emergence of high frequency and algorithmic trading, the flash crash of 2010. All of these highlight the role in which we've seen automation and AI applied in the context of securities trading, particularly by large exchanges, market makers, trading firms, hedge funds, and asset managers, all of whom are core and dominate the vast majority of trading activities in securities markets today. And if we think about some of these activities, it's very much the case in major markets that the majority of transactions take place on a machine-to-machine basis with heavy application of a range of techniques, including machine learning and other forms of AI. And even as of recently as 2 years ago, approximately 10 billion of assets were actually under independent, albeit supervised, AI management. So I think we can say that over a period of decades, finance, particularly in the context of securities trading, has been one of the leaders in the context of the application and development of AI. Another area of finance where we've seen a lot of application and development is particularly in the context of payments and fraud. If we think about Visa and MasterCard in particular, we think about vast amounts of transactions, and we think about very large amounts of fraud. All of us have experienced these sort of notices from our bank about suspicious transactions on our cards. And this is an area where there's a very high level of application of machine learning, automation, and artificial intelligence, particularly from the standpoint of pattern recognition, from the objective of reducing the costs, the losses associated with fraud, but also from the standpoint of reducing false positives so that consumers don't have their cards stopped just because of some triggered transaction. If we think about other areas, we can think about asset management. We can think about the idea of Robo advisory services, where one combines technology with portfolio theory, combined with passive investment vehicles, and in particular, easily available electronically traded, exchange-traded funds to allow the development of automated and increasingly sophisticated advisory structures in major markets to support robo-advisory services. One can also think more recently in the context of risk management, in the context of compliance functions, in the context of RegTech, in the context of SupTech, in the context of lending. One of the most important applications in the context of AI and machine learning has been in the context of use of mass amounts of aggregate data for lending decisions, analyzing both financial data, particularly payments data and other forms of cash flow data, but also other forms of non-financial data, reputational data, things like, do you show up for a restaurant reservation, or do you have a reputation of trustworthiness in the context of social media activities? These things combined have allowed an important expansion of the availability of credit to small and medium-sized enterprises, particularly in the context of China with Ant and Tencent, but also in the context of the United States with a range of providers using these sorts of big data AI applications in the context of credit. You know, the areas where it's probably been less used in the context of finance has probably been in the context of foreign exchange or in the context of bond markets. But even these are now developing very rapidly. And if we think about why has AI developed so rapidly in financial services, it's really a combination of those general factors that are leading to our current wave of AI, which is around computing power, around the digitization of everything, around the availability of storage, around the availability of communication systems, and the development of theories and algorithms using all of these in the context of a variety of applications. Finance, because of the very large amount of structured data, combined with the high level of digitization over an extended period of time, combined with the availability of financial resources and strong financial incentives, all combined with a specific discipline of academia, finance, which focuses on quantitative analysis of data from the standpoint of understanding and performance in markets. All of these factors have meant that AI has developed particularly rapidly, often at the very cutting edge, in the context of financial services. And now, with the development of ChatGPT and other forms of generative AI, I think we're really seeing an inflection point, if not a paradigm shift, not only in the accessibility of AI generally, but specifically in the context of finance. And if we think about the adoption curves of ChatGPT, it's really quite striking how rapidly it has been used by very large numbers of people all over the world. And I think that this is really the transformative aspect of some of these systems, in that they are so accessible and so easy to use. Their power in the context of financial services, I think, is very much in the context of the large amounts of data which is already available in the financial sector, but also the large amounts of data that are available inside individual financial institutions. In some ways, the real power of ChatGPT and other forms of generative AI is in the context of the interface. It's the ability to feed in a variety of different forms of data. So for instance, one can think about the existing large language models which are feeding the various systems, but one can also think about an evolving range of proprietary large language models. For instance, in the context of Bloomberg GPT, which is using Bloomberg data as the data set for a generative AI interface. And of course, the better the quality of the data, the more effective and usable it's going to be. Likewise, from the standpoint of a large financial institution operating in multiple markets, multiple segments across the world, it will have collected vast amounts of data. And the ability to use a generative AI system as an interface to better access these disparate sources of data, I think is tremendously powerful. What are we seeing on the regulatory side? I think we can basically break it down into two pieces. One is on the macro side. The macro side ranges from discussions about the singularity and the development of superior forms of AI and the potential existential threats to humans, as well as to discussions around macro job issues, the potential impact on large segments, particularly of existing professional employment and opportunities from the future. And this is something that if we think about finance, there are very definitely concerns given how much of financial sector employment relates to analytics. But at the same time, I think very strong opportunities from the standpoint of the human-AI interaction and its application in the context of finance. At the same time, you also have a range of micro factors. These micro factors range from discrimination to accountability to appeals frameworks. And I think that this is an area where finance and other regulated industries, like healthcare, for instance, have a real advantage in that because of the existing regulatory framework around the industry, there are already systems of personal and firm responsibility. And this is driving what I think is one of the key responses to the use of AI, but also particularly around micro concerns. And that is explainability systems. And what we already see in finance and other regulated industries is a real drive to implement explainability systems at the same time as AI is increasingly used, for the simple fact that firms, officers, individuals are already on the hook if something goes wrong, regardless of the source. Beyond these, we're also seeing a range of data laws, particularly GDPR in the EU, and human rights laws that are looking at a variety of aspects. But as I said, it's often the case that there's a division between what we're seeing in regulated industries like finance, which already comes with many of these required frameworks, and other areas like tech more generally, which has often not been regulated to the same extent. So, as with other industries, I think going forward, generative AI is making data more usable, more accessible for financial services. This certainly carries some risks. It also carries some major opportunities, as well as some real challenges from the standpoint of developing experience so that people can best work together to get the maximum value out of data and analytics.